let's go ahead and get started. Thank you everyone for joining us today. The topic for the webinar today is Cash is King, Discovering the Future of Cash Flow Forecasting. A quick introduction for myself. My name is Kevin Bright. I'm the product manager for Pronovos Construction Intelligence Cloud. Pronovos is a data analytics software really focused on meeting the needs of construction companies, really to gather more insights into their data so they can make more informed decisions. Prior to working for Pronovos, I was actually in the construction industry myself. I spent about 7 years doing project management for a mechanical contractor out in Southern California. So oversaw a lot of projects, have a lot of experience in the construction industry, very familiar with the challenges that a lot of you are facing out there, especially when it comes to some of the financial aspects of managing your business. I should say, as we're going through this, feel free to add any questions. We're going to save all the questions at the end, but I promise we'll save a few minutes at the end to address any of those questions you might have. All right, let me end this poll here. Okay, so let's get into the meat of it. So the importance of cash flow. Why is cash flow important? I think we've all heard the phrase before, cash is king. It's probably something we take for granted. We've heard it so many times. It's become generic, it's become cliche. But I think it's important to step back and consider why is that cliche? Why is cash king? And I think we can look at this chart here to look at the build amount of a project versus our cash received on a project versus our cost on a project. Just one moment, please, sorry. Sorry, I had some technical difficulties with my audio, but let's get back into it. So if we consider why the cash is important, we can kind of see here we first experienced costs on the project in August 2021, but we didn't actually get cash flow positive on the job until June 2022. So it's basically a full year into the job before we're actually seeing a cash flow positive on the project. And I think that's something we see in construction a lot, is there basically this delay between when we can kind of incur the cost and when we actually see the cash on the project. So really managing or making sure you have a good process in place to manage that delta between when you may incur the cost to when you actually experience the cash flow is a really important thing, to make sure you have a good handle and process in place as a construction company. If we consider some of the challenges to cash flow, I think there's a lot of reasons we might experience challenges to cash flow as a construction company. The first one is really the unpredictability behind the payments. So this is something that I think you'll see a lot in construction, is we almost all have payment terms within a contract. Usually it's around, hey, we expect to get paid within 30 days. But I think a lot of contractors will see that just because they have those payment terms does not mean that they're actually going to receive that payment within 30 days. And, it's not as easy as saying, hey, it's the first of the month, we expect to see a check for $100,000. You don't necessarily know if that payment's going to come in this week, next week, or the following week. The second challenge to it is the slow payments. So I think we would all love to see us get paid within 30 days, but I think that's always in the ideal. It's never actually as predictable as getting paid within 30 days. I think we can see a lot that there's a lot of times where we're not going to get that payment until 45 or 6 days after we submit the billing. And that isn't even taking into account the delta between when you incur the cost and when you're able to submit the billing. So having that slow payment in construction is really a major obstacle that can be hard to combat, to make sure that you are really staying ahead on your cash flow and positive from a cash flow standpoint. And one thing you can look at to really get an idea of the difficulty between the volatility of payments and the slow payments is looking at the day sales outstanding. So the day sales outstanding is basically an approximation of how many days you think it's going to take to get paid on a job. And if you look at this chart here, we can kind of see the volatility from one month to the next. It really can kind of go from anywhere from as high as 100 days to as low as 35. And what we can kind of see is most contractors are going to kind of fall in that middle range in that 45 to 70 day average days to pay. And that can really be an obstacle for construction companies to make sure that they are making sure they're getting their payments in a timely manner. And then kind of the last main obstacle is the idea of retainage. So in every project, you're typically going to have a concept of, retainage where you're going to, on any bill that you submit, that last 10% is going to get held until the very end of the job. And that's really going to put you in a hole where basically, even if you are on top of all your cash flow, all your billings getting paid on time, you're going to be that 10% behind when you start to look at your cash flow. So those are some of the challenges that we have when we are looking at cash flow forecasting. And I think really the question is what can we do with it? And from here, we're going to hop out of PowerPoint and we're going to dive into the actual Pronovos tool, looking at the cash flow forecasting. Pull this up here. All right, so when we look at a cash flow forecast, what we're really going to be looking at is a 13-week cash flow forecast tool at the company level. And whenever we look at a cash flow forecast, really the first place we want to start is where are we today? What is our current trial balance today? And what is the line of credit we have available? And what we can do to basically look at it is if we go into the settings here, we can actually select the GL accounts that you have as a company. So these accounts are going to pull directly from your ERP system. And so you can basically select, hey, what are the accounts that I want to include in my trial cash balance? And what is my line of credit available to me? And then what are my liability accounts that I need to deduct out from that line of credit? So I'm going to select my cash accounts here. I'm going to save it. And now if I go back to my cash flow forecast, I can see both what my current trial balance is. I can see what that line of credit is I set available. And I can also see what the line of credit total I have. And then if I subtract those liabilities, I get to my line of credit available. So if I look at my current trial balance, I'll see the actual balance to date for each of those different GL accounts I've selected. So if you add all these up here, you're going to get that 2.220 million. And then that current trial balance, that's going to become our forecasted beginning balance for our first week down here in the chart. So you can see here, this is a 13-week cash flow forecast. We start in the current week, February 26th, and then it's going to go out for the next 13 weeks, pushing us out towards the end of May. So if we look at our forecasted beginning balance, there's going to be two components to it. You're going to have your inflow and your outflow. So basically your inflow, that's going to be, hey, any money that I have coming in the door, and then your outflow, just like it sounds, any money that's flowing out of the door. So if we take a look at our inflow, I think kind of what we know, the big bucket of what's going to be that cash coming in the door, it's going to be our accounts receivable. And so what this is going to do is it's basically going to pull all of your outstanding invoices from your accounting system, from your ERP system. And it's going to ask you to project the payment date for each of those invoices. And then based on the projected payment date that you give those invoices, it's going to group it into one of these weeks. So you're going to see it either in the first week, if you have a payment date within the week of February 26th, and then so on based on how you're assigning the projected payment dates for each. So if I actually click into one of these weeks here, so I'm going to click on this 163. And I can see each of the invoices that I have assigned within this week. So I can see, okay, I've got 3 projects with 3 different invoices that I have projected payment dates. I think I'm going to receive one of those payments today, and then 2 of those payments tomorrow on Thursday, March 2nd. And if I look at the total for those 3 payments, then I can see that I'm expecting $163,116 for the week in AR collections. Let's say I look at this legacy at Millennium Park, and I don't think that projected payment date is accurate. I can click on this date right here. And what it's going to do is it's going to allow me to go in and modify that date. So let's say, hey, I don't think it's going to be on March 2nd. I actually think it's going to be 1 week from now, March 9th. I can select that date and I can provide a reason for why I think that's going to be. So let's say I'm waiting on approval still. So I can select the reason for it and I can say maybe, hey, Jim, with the client still has not approved the payout. So then if I make that adjustment there, it's going to save any kind of adjustments I make down at the bottom here. So I can kind of see historically any prior notes that I may have made for an invoice and what that projected payment date might be. So in kind of real time, I can kind of see accurately, okay, you know, if this payment is getting delayed, what were the notes that we kind of marked down there so we can have some visibility into what might be the reasons that we're not getting payments in a timely manner. So as I make those adjustments, you know, each of those weeks, my AR collections, all those invoices that I have for those weeks are going to get totaled there. So I can see that in the outflow. And then in addition to the AR collections, if you have any other payments that you would expect to have an inflow for, you can assign it here in this line item. So I have kind of a generic one right now, tax refund. We think we're going to get $50,000 the week of March 26th. If I needed to add another reason, I could click this add button here. I could go in, enter a description. So let's say we think we're going to get more money. It's going to be for $100,000 and it's going to happen weekly. So I can go in and select this frequency. So I can say, hey, is this going to be a one-time payment? Am I going to get this payment weekly, bi-weekly, or maybe it's something that's going to happen once a month? So I'll select weekly. I'll give it a start date. And let's say, so the first start date will be March 1st, and I think it's going to go through June 30th. And if I hit save, I can see that's going to get added here. So now if I look at my total inflow, not only is it taking into account my AR collections, but I'm also seeing any of these other items that I have assigned below. So I've got my more money, $100,000 a week, plus my AR collections of 163. My total inflow for that week is going to be 263,116. And if you go to all the other weeks, you can kind of see the same thing. So in March, I've got 314,000 in AR collections, $100,000 in more money. So my total AR or my total inflow for that week will be 414. So that's how we handle the inflow side of it. Then the second half of it is, of course, the outflow. So if we know how much money is coming in, what's going to be flowing out. So if I am able to open this outflow here, I can see it's going to be the same thing. So on the inflow side, I had the AR collections. On the outflow side, I've got my AP. And same idea, if I click into the AP here, I can see each of the invoices within that week. I can change the dates, give a reason why, and it's going to update that total for me. The other default one you have on the outflow side of things is going to be the payroll section. So the payroll, it works the same way as the other modals. We can go in and assign basically the frequency and the total amount that you have for that. So if you're saying, hey, we do payroll bi-weekly instead of weekly, I can come in here, change it to bi-weekly. Let's say it starts the 1st, and it's going to go, oh, we'll put it way out there. And let's say it's 150,000. So now I'm going to see, okay, now I've got that new payroll amount. And you can see kind of as I'm updating these items, it's updating that outflow at the top. And then that last row down at the bottom, same thing as the inflow where you could assign other items. You can do the same thing here where you can create other items. So if you select this item here, you can kind of modify it, delete it. Let's say, hey, we don't have rent anymore. You go in and delete it, and it will kind of remove it from the calculation. So let's add one just for the sake of this here. We'll call it new line item. We'll give it an amount of 50,000, and we will say it is biweekly, just for the next month. So we'll see it kind of add twice. Okay, so now we've got our outflow. So again, you can kind of see the outflow total here is the AP payables amount plus the payroll amount plus those new line items that I've added here. So now I've got a total for both my inflow and the outflow for the week. So my inflow I can see is 263. My outflow is 238. So that means my net cash flow on the week is I'm going to increase by $24,906. So if I'm looking at this here and I say, okay, my beginning balance was $2,220,000. My net cash flow on the week is $24,906. So that's going to give my forecasted ending balance at $2,245,000. So if that's my ending balance, that's going to become my beginning balance for the following week. So all right, on March 5th, that's what I know my beginning balance is. It's going to have that same process of the inflow and the outflow to get you to your net cash flow. Your net cash flow is going to get added to that forecasted beginning balance. And now I have my forecasted ending balance for the end of the March 5th week. And it's basically going to do that math for each of the 13 weeks on the cash flow forecast. So it gives you a very quick way to basically go in, change the dates for your AR collections and your AP payables when you think you're going to get paid on the AR side, and when you expect to pay out the AP on the outflow side. And based on that math, you'll basically get to a net cash flow position that gives you that forecasted ending balance. So that's kind of how the cash flow tool works. A couple other things that really make this a little bit easier is if you don't want to kind of do this kind of on a week by week basis, or let's say it's kind of two different roles, you know, one person's in charge of managing the AR collections and another person's in charge of managing the cash flow forecast, you can actually go to the AR collections tool right here. And what this will do is it will allow you to basically see all of your outstanding invoices. So if I look at it, I can kind of filter by client, project. I can see the aging status, the total amount outstanding. If anything is past the projected payment date, I'm going to see a little yellow exclamation point here telling me that I need to update it. And I can do the same thing here. If I click into an invoice, let's find a good one. I can go in here and modify the date. And something else that's really good is you can also scroll down here and you can see all of the invoice history for previous invoices on the project. So if you want to get a sense of, hey, how quickly is this client paying on the project? Well, I can see historically they're paying in 54.6 days. So that gives you some information when I'm assigning that projected payment date. I probably want to put it somewhere in that 50 to 60 day range to make sure it's probably accurate as it needs to be. You can also filter different ways here. So if I want to see my everything I have in 0 to 30 days, I can click on this bucket here. If I want to see 31 to 60, I can click here and I can see the amount of invoices that I have within each of those buckets. Same thing on the filter. If you want to filter by project, let's say I go in here and I want to see everything related to, let's go, would be a good one. Let's say Greenwich Street. Oh, turns out I don't have any invoices for Greenwich Street. So let's clear this here. There it is. So I can see all kind of my invoices for a certain project. And you can do the same thing at the client level too. So let's say you have a dozen different projects with the same client. You could go in here and filter based on the client, and you can kind of see in one snapshot all the outstanding invoices that you might have with that respective client. So that is kind of at a high level how the cash flow forecast tool works in Pronovos. It really is meant to give you as much flexibility as possible to go in and really look at your kind of AR and AP and get more precise with it rather than just kind of saying, hey, we think, maybe we'll get paid sometime next month. Actually putting a projected payment date down for it, tracking the reason for why you think that it's a projected payment date. That really gives you a lot of insight down the road. If you start to populate, hey, why was this payment delayed? you can start to get some insight into your operations. Are we constantly having to push out payment dates because we are missing paperwork? Well, if you're constantly missing paperwork, that probably tells you there's something you need to do with your own internal processes to kind of clean it up, to make it more proficient, to make sure you're receiving payments when you expect to. So as we're kind of wrapping up here, I'm going to launch another poll for you guys to kind of see. Let's see here. How often you guys are currently doing your cash flow forecast. You know, it's always interesting to see what other contractors are doing out there. Is it something you're doing daily, weekly? Are you not doing it at all? You know, it's something that if you currently aren't doing a cash flow forecast, it is a process that we think it really helps you manage your business better, to make sure that you're not getting in trouble financially. Because that is where we see a lot of contractors struggle. Is it's not necessarily on the profitability or the total volume they're doing. It's making sure they have enough cash in the bank account to fund their operations. And with that, we've got about 5 minutes left. So I see there's a couple of questions in the Q&A. I'll kind of turn towards those real quickly here. So the first one, the comments are saved in the AR. Do the revised dates flow through to the cash flow forecast? Yes. So as I'm looking at the AR here, if I go in here and update a payment date, so if I change this from August 5th, let's say I'm going to change it to March 1st, let's save it. So now my payment date is changed from August to March. If I go back here to my cash flow forecast, you will see in the AR collection that Chrysler building, that $293,000 that I just changed from August to March, is reflected here. So you can see, I don't know what that was. It may have been 15, 20 seconds. I was very quickly able to adjust that payment date, and I can see how it would impact my cash flow forecast overall. Next question, does this tool allow you to capture actual results so users can compare how accurate their forecasts were? If so, does this maintain historical results so they can be used, considered to adjust future forecasts towards making them more accurate, reliable? So as it is today, this cash flow forecast tool is purely forward-looking, looking at the 13 weeks ahead. What I will say, though, is part of the Pronovos platform is our analytics offering, where we have a lot of dashboards available out of the gate that allow you to get insights into how your historical performance is. So what we could do is basically look at the historical performance of what that cash flow is. So you can kind of see that side-by-side comparison of saying, okay, this is where I thought we were going to be versus where were we actually from a cash flow standpoint. Is this program designed to have data populated from the accounting system or separate data entry? So this will be pulling all of your GL accounts, your GL trial balances, AR, AP invoices. That's all going to come from your ERP system. So how it is set up is Pronovos would set up a connection with your ERP system, and then we would do a nightly pull of your data. So it's always up to date within 1 day of basically any AR invoices, any AP invoices that you would have in your accounting system. Can the cash outflows tied to pay when paid clauses be changed when you modify the cash inflow dates? That is a really good question, and it is something that we currently do not do today, but it is a enhancement that I expect we will have as part of the tool probably within the next month or so, where basically what it would allow you to do is it would allow you to tie an AP invoice to an AR invoice. So if you went in and updated that AR invoice and said, hey, on this project, I think I'm going to get paid, on March 10th. What it would basically do is on the AP side, you could tie that AP invoice to that AR invoice, and it would delay that payment by 7 days. So if you said, hey, on the AR side, I think I'm going to get paid on March 10th, then it would say, okay, we think we're going to pay this related invoice out on March 17th. We got a comment from Phyllis. This is the best thing since sliced bread. Really appreciate that, Phyllis. Always great to see good feedback. Okay, next question. So each project must have a projected billing collection schedule input. Correct. Yeah. So basically, the cash flow forecast is based on assigning that projected payment date. Now, what we're going to do when we pull your invoices from the ERP system is we're going to automatically calculate a projected payment date for you. So a lot of the ERP systems, they already have a due date in their system. So unless you overwrite that projected payment date, we default to assigning the projected payment date as the due date. So it at least gives you a starting place where you can kind of see what the cash flow forecast is based on if the payment was paid on the due date. All right, I think that's, I see one more come in here. Can you have the forecasted payment date default based on the customer average? That's another really good question, and it's another one we don't do currently today, but I anticipate we'll have that enhancement within the next month. So we would actually look at different ways that we could do that projected payment date. So we would look at not only the customer averages, but the project averages, and then also what your company's day sales outstanding are. So you have kind of different methods to basically look at what might be the most accurate to project what that payment date is. All right, I think I do not see any more questions. I'll stay on for one more minute just as we're kind of wrapping up, but in the meantime, I will launch one more poll to see if anyone would like to see a demo, a more in-depth demo of the Pronovos product or the cash flow forecast tool. Oh, I did miss one question here. Is the data saved on site in our server or is it in the cloud? If the data is coming from the ERP system, it's kind of how your ERP system is set up, whether that is on-premise or in the cloud. But Pronovos is a cloud-based technology, so all of our data is saved in the cloud. You'd be able to access it through any web browser to see the data. Awesome. Well, if there's no more questions, I think we're coming right up on the half an hour, so we will call it a webinar. If you have any follow-up questions, my contact email is up on the screen. Feel free to reach out, and I hope this was helpful today. Thank you, everybody, for joining.